showing a HELOC versus a traditional loan. So right now you're on a traditional loan that's at about 5.25%, and this is your daily interest charged. Your loan amount would be like $175,000 towards your house. This is your principal, daily interest, and your balance. This is per day. So this represents 30 days. At the end of the 30 days, you pay $966 towards the mortgage. Then it reduces the actual balance. So that's what this line represents, the balance being paid. And this is how many days it takes. So just remember, this orange line is the traditional loan. So the difference is you have all these days to where you're just gaining interest and having to pay it down. And you don't even pay it directly. It comes from your checking account, which you pay your checking account, then you pay the loan. So it just adds more days and transactions pending. So going from there, you have another month, and then you have another month, and you have another month. But the total is you're still being billed like about $25 a day. And then until you get all the way down to where it's paid off. So this would be the final payment. So 10,650 days comes out to about 29.17 years. And again, this would be your minimum payment. So you can always pay more on it, but this would always be your minimum payment, $966. That's with a traditional loan. So you're going to be forced to pay all that interest, and it's going to be over an amount of 10,000 days. This is an example of the HELOC. And this is at the same interest rate, 5.25%. This is your daily balance. But I'm also adding credit card payments. So you're paying your credit cards through your house. And it could be effective the same day when you make payments. And it's $175,000. And then your daily interest is about the same, but the difference is you pay it with your entire paycheck. So you already know $750 what you get paid every 7 days goes directly to your loan. So your effective interest that you pay goes down every week. And then you go ahead on the 28th day, get that direct deposit, then you pay your credit cards on the 30th day of the month. So it's $1,000, and I'm just estimating $1,000. I mean, if you're spending more than $1,000, then this will change a little bit, barely though. So here's another month, $750, $750, and then another $1,000 payment. So I did this throughout the entire life of the home equity line of credit loan, which it's flexible because there's not a minimum. Well, there's not a minimum of like the traditional loan, $966 has to be met. So if you pay $3,000 this month, that minimum's met, but you're still going to have to be forced to pay it this month, this month. The minimum for the home equity line of credit, so if you go broke, you're just needing to pay the interest on the loan. So that would be this amount for the 30 days, which would be just $726 for the entire month. But it obviously goes down after, 5 months, 3 months, because the amount borrowed is less. So your minimum payment is just the interest on the home equity line of credit, and you can put direct deposits, your checks directly to it, pay your credit cards directly from it. And you'll see here these are days, again, just like the traditional loan. The blue line represents how fast it gets paid off. So you can see about takes 3,291 days to pay off the loan at 5.25% with $750 being paid every week, as well as paying your credit cards of an estimated amount of $1,000. Sometimes you're not going to be paying $1,000 every month. It could be only like $300 or $500. So that's an example there. And this line represents how quickly it gets paid off. So 3,200 days. You can see here. Three thousand 291 days divided by how many days in a year? It takes 9.1 days, or 9.1 years. So basically 9 years to pay off your house, instead of going through a traditional loan, which, why would you want to do that? They're locking you into paying the total amount of interest versus a traditional, or just a regular HELOC. You can pay it anytime, you can pay it even more than this if you wanted to. So that's an example of the home equity line of credit.